All right. I know everyone's mad that I'm late, but I was on the phone with someone for the past 2 hours who you guys haven't heard from in a bit because he's been really fucking busy doing cool shit. Derek, you want to say hi?
What's up, everyone?
All right. There you go. All right, Derek. I got to do the show.
See you later.
Talk later.
Bye. Okay, have fun.
All right. Market close. It's time. I'm sorry I'm late, but we are here. And it looks like, ladies and gentlemen, Tesla. It looks like Tesla is going down the drain, at least for today, because Elon freaking Musk might have musked everybody again. And what I mean by that is a Bloomberg article that apparently came out 5 hours ago. I have tweeted at Elon Musk to try to get confirmation of the article. Apparently, he does not think I am important enough to respond to. But it does look like Mr. Elon Musk is delaying the Robotaxi August 8th event to October. And if that is happening, then yeah, Tesla probably deserves to be down. Now, look, the entire macro is down. We'll talk about the macro in a bit. CPI came in cooler than expected. Macro slowed down. A lot of stuff to talk about in terms of sector rotation, things that are happening. But still, this is the headline of the day. I don't think a 3-month delay matters, but Bloomberg is saying that Tesla has delayed. And if they have delayed, then maybe that's why it's bad. So right here, Tesla is postponing its planned Robotaxi unveiling to October to allow teams working on the project more time to build additional prototypes. The roughly 2-month delay has been communicated internally, said the people, who asked not to be identified because the information hadn't been publicly announced. The design team was told this week to rework certain elements of the car, one of the people said. I don't think this is fake news. I could be wrong. Bloomberg is not Reuters. I know Bloomberg's not perfect, but they're not Reuters. Reuters is a little bit less trustworthy. Bloomberg is still a legit news source. I know it's not perfect. I get it, but I don't think Bloomberg puts this out if they don't think they have the right intel on this decision. They also made a very specific claim, and the claim was the design team in particular has been asked to rework on the Robotaxi itself. Tesla right here down 8%. Tesla has lost $70 billion of market cap in the past 5 hours because of this report. Elon has not said anything. I've tweeted at him. I've tried tweeting at him many times. People have tagged him in my comments on Twitter. He's not responding. Either he's playing Diablo or he doesn't care enough to respond to this, or maybe he's waiting till 4 p.m. because people are saying he can't respond during market hours or some shit. I don't think that's ever stopped Elon from responding before to something. So I think we'll see what happens, but maybe he is waiting till 4 p.m. and then we'll see what happens. Now, here's the question to everybody in the chat, and this is what I asked on Twitter. Does this actually matter? Because in my opinion, this does not change anything about the Robotaxi. This just is like, hey, I need a couple months. Now, if we don't have an October event and he says, I need another couple months, and then this doesn't happen until 2025, yeah, then it's like a little concerning. But if he needs 3 more months, it's like, all right, bro, like take 3 months. Like, it's not take 90 more days. To me, this does not matter at all. This is not significant, but to the market, obviously, this is kind of annoying. And also, it feels like the market needed an excuse. Yeah, I see most people saying in the chat, it doesn't matter too much. I think the market needed an excuse because obviously Tesla is up 87% from the lows, 50% in the past month. The market needed any reason. The RSI was over 70. It was at like 90 or some crazy. Like it was getting up there, and we hit 271 in the beginning of the day, which is why the stock market is so crazy. We thought Tesla was going to run past 270, and then boom, this piece of news drops. Now Tesla did decline after that 270 level, but this piece of news really, you see this red candle right here, that's where things really hit the fan. We did hit 239.65 as well, so we did get into the 230s. But right now here at 240 for Tesla. RSI was at like 20 after it sold off. Yeah, well, the dip hasn't been bought yet. And granted, it's because the stock is still up like 60% in the past 3 weeks. Sean says, I love Elon, but he has never been on time. This is true. Bsoft says, yes, it matters. I sold at 230, so this is the second chance I needed to get back in. Dude, covered calls. If you sold some 250 covered calls, 265s, you made a lot of money today, or at least you're up a decent amount on the on the covered calls, and you can probably cash in on that premium. A lot of people were saying, oh, you never sell covered calls on Tesla, like it runs too much. It's like, yeah, that's true, but then something could happen and you can navigate the covered call position. And something always tends to happen, especially after stock goes on a massive, massive run. Now, granted, I thought this sucker was getting ready to gear up to 300, especially when we got to 270. It seemed inevitable that, okay, like, so the market's really betting on this. But I think now, if anyone was doubting that that Robotaxi was the reason it was going up and it was like their deliveries or their energy numbers, I think this downside we're seeing today, it's very obvious that the market wanted Robotaxis, and getting a delay in Robotaxis is making the market at least a little bit upset. And so, as Tom says right here, the question is, will it keep dropping? That is the question. I'm using Webull. For those asking, I'm using Webull. It's a free software, and you can download it to use as well. Chad says, I paid for FSD in 2018. I couldn't be happier waiting. So shout out to Chad. He was on the Market Open. I'm going to clip the part of the Market Open that he was on. So for those that didn't get to see it, he came on and talked and educated us about Palantir and a bunch of different topics. So I'll post that video later. But see, here's the thing. Paid for FSD in 2018. I couldn't be happier waiting. I don't know if Chad's saying he's being sarcastic there, but if you want FSD to like not kill you at the end of the day, then you want to get it perfect. And if Elon needs to get it perfect and he wants the Robotaxi to be perfect, then waiting a couple months is not that crazy. And yeah, if you're used to not only owning Tesla stock, but using FSD, you've been on a delayed timeline for almost 7-8 years now. So what's another 3 months? What's another 3 months at the end of the day? And it looks like we're probably going to get another 3 months. Chat says, I'm happy to have visibility into the progression. Yeah, and I think the point of Robotaxi and that event is to show people progression is real. We got the market close in 10 seconds, and that progression is going to be materialized in 2025, not 2026, 2025, which is why the valuation premium is justified. And now Elon's just got to confirm that that's going to happen, and hopefully we get a response now that it's 4 p.m. Thank you, everybody, for being here. Thursday, July 11th, the stock market is now closed. All right, so we'll get back to Tesla in a bit. There's a lot of other narratives that have happened in this market, and let's discuss that, and then we'll go back to Tesla. First of all, shout out to the winner of the day, TNA, the 3X triple leveraged fund on IWM. IWM had a great day, up 3.6%. We have never seen, not never, but like in the past 6 months, it feels like never. We have not seen IWM go up 6% and seen NVIDIA go down 5.57%. So IWM up 3.45, TNA up 6%, NVIDIA down at 5.57. I think this is a healthy rotation. I think it makes a lot of sense. We'll talk more about what that rotation means in a second, but NVIDIA's down, small caps are up. Remember Stanley Druckenmiller, the guy who bought 700,000 shares of Palantir 3 months ago or 2 months ago? He also bought $500 million worth of calls on this ETF, IWM. And it seems like he believed that eventually there would be a rotation. And maybe with today's CPI report, there will be a rotation. Broadcom got upgraded by one of the firms on Wall Street. I'm forgetting the name of the firm, but they upgraded them to $2,400. They have the highest price target on the street. So that'll be $240 post-split. So Broadcom got an upgrade, still was down a little bit today. Robinhood up a little bit after hours, but it was down. Bitcoin fell, so Robinhood fell with it. JP Morgan was down a little bit today. TFC, $40.39. Regional banks did great today because of the cooling CPI data and inflation data, which means that rate cuts are likely on the way. TSLL, that was down, 16%. So obviously that's 2x leverage Tesla, so that one went down. Netflix was down 3.6%. Disney was down 0.38%. Uber was, Unity was up a little bit, and then Uber was also up 6%. Wow. Uber was up 6%. I really feel there is a Tesla-Uber inverse relationship going on. I mean, why else would Uber be up today? It's not like there was any Uber catalyst. That is so weird, dude. Wow, Tesla goes down 8%, Uber goes up 6%. It seems like I think the comparison between Uber and the Robotaxi is like stupid right now because Uber is such a big company. Robotaxi is not defeating Uber anytime soon, but it feels like perceptually the market has paired them against each other. Let's look at the Mag 7. So all of the Mag 7 were down on the day. Amazon, Bezos kept selling, down 2%. NVIDIA down 6%. Tesla down 8%. Google down 2.8%. Meta took a beating from 540 to 512, down 4%. Microsoft down 2.48%. And then Apple down 2%, basically gave back the gains that it got yesterday, but still Apple up 20% year to date. So Apple has been having a decent year so far. Actually, it's up 20% in the past month, quite frankly. So Apple's still been doing good. Marty says, is this fake news or true? The problem is we don't know, and Elon's not responded. Let's go to his Twitter. Let's see how active he was. Last time the Reuters thing leaked, he responded within like 2 hours. He didn't take this long. So when's the last time Elon tweeted? Elon tweeted 1 hour ago. Okay, so he said ketchup Lays are great. So I refuse to believe Elon's scrolling on his Twitter and he doesn't see like the entire Tesla community freaking out about this Robotaxi event. And he decides to comment on Lay's ketchup chips. By the way, these look disgusting. Ketchup on a chip is just like that. That does not look like it's going to taste good. But anyway, it's probably better than a mayo chip, but ketchup chip doesn't seem like it's the best. So Elon obviously has seen the concern, but he's not saying anything, which kind of leads me to believe this is true. Or Elon's literally trying to like get the shorts to like pile in right now because they're probably doubling down given this Robotaxi news, and then he wants to squeeze them with a tweet at like 4 a.m. while he's on the toilet being like, oh yeah, by the way, this was fake, acting like he didn't even know this Bloomberg article was out. That's probably how it would happen. Or it might be real. And so we'll see. We'll see what happens. But that's what we've got going on right now in the context of Tesla. So hopefully we'll get an update while we're live on the show and see what's happening there. Outside of the Max 7, we saw crypto stocks. They did well in the beginning of the day, then Bitcoin fell. Bitcoin got almost to 60 grand on the CPI data, and then it came back down. As you can see right here, Coinbase fell 2.25%, CleanSpark fell 1.45%. Now, the CPI data we got was below expectations. Market wanted 3.1. We came in at 3.0. As soon as that happened, we went green. We went red an hour later, and I felt it was the most predictable red because yesterday we ran up 1%. So it's like the market basically front ran all of the good CPI news, and it was great, but the market gave back those gains because you probably can't run that quick in a day. I mean, the S&P going up 1% in a day is kind of crazy yesterday with no news. And the argument is if the S&P and the NASDAQ start to just chill off a little bit because Tesla, NVIDIA, Microsoft are also going to take a break, and other companies that were lagging are going to start gapping up, well, then the S&P doesn't have to go up that much. And if the S&P doesn't have to go up that much, it can give back some of the gains that it ended up getting today. So it felt like that was, it felt like felt like very healthy to me. Let's talk about Palantir. Palantir's rotation to the downside also felt very healthy for me. First of all, we closed above 27.5, which is amazing. We didn't get stuck in the 26.80, 26.30, 26.90 range. So we closed above 27, then above 27.5. 27.5 is a very important number because that was the previous 52-week high in March. So that to me is kind of like a base level. If we can remain above that and then make the next 52-week high that becomes support, well, that becomes very important. So the question is, are there dip buyers on Palantir in this 27, 26.90 range? Today, yes, there were. 60 million shares were traded. Those 60 million shares going back and forth decided that the fair value of Palantir today is $27.63. To me, that makes me ecstatic. Palantir is up more than 50% year to date. That's incredible. Even if Palantir fell to 23, it would be up 35% year to date. So I think this was a strong close. I think it's better than rushing to 29. I think that would have been a little bit too much euphoria. But the broader market selling off today to me was very logical, and we kind of saw it coming, and it came. And so I don't think that's too big of a deal at the end of the day. Wrong mic. Oh my God. How you guys didn't tell me I was using mic the whole time? How is Tannor the only person to say I was using the wrong mic? Oh my goodness. That means you guys probably didn't even hear Derek in the beginning because I was holding him to this speakerphone. Wow. That is Tannor. Thank you for being here, Tannor. I appreciate that. That no one said that. Wow. Or maybe I missed it. Goodness. Maybe the audio was so good or maybe my voice just sounded so good that it didn't matter. So Victor said, trim my Tesla position at 270. Wow. Talk about getting the top, or at least the short-term top if we're there. But yeah, this is going to be interesting, dude. 270 was crazy. I felt like, oh my God, like it was defying expectations. If that Bloomberg article didn't come out, we probably wouldn't close at 270 because the market fell, but it wouldn't be 239 or whatever it was. Bayray says, I couldn't tell the difference because you sound gay on both. Thank you. That's so nice. All right, let's hear from Ed Yordani. Raise this price target to 5,800 on the S&P. Let's see what he had to say about the CPI data.
This is to our talk of the tape, even higher stocks. That is the call today from Ed Yordani. He joins me right now. Ed, welcome back. It's nice to see you.
Thank you. Thank you, Scott.
CPI better than expected. Yields fall. We see parts of the market going up pretty sharply today. What do you make of it?
Well, I think the bull market is broadening. As you know, there was a lot of concerns that it had been narrowing to just a handful of stocks, the so-called Magnificent Seven. But I think today's an important day. I think this is the day where investors are starting to rotate out of the Magnificent Seven and into the rest of the market. I don't think this is going to continue to pull the S&P 500 down. I think there's going to be enough money to keep the leading stocks that have done so well fairly elevated. But I think we are going to see more gains in the S&P 493, as well as in the mid caps, the small and mid cap stocks.
So this is the start of something, because that's been the great debate when this broadening would happen.
And this really is the great debate, dude. Tomorrow, if NVIDIA goes up 6% and IWM goes down, all of this analysis is bullshit. Like literally, if NVIDIA just gaps up tomorrow and then IWM goes down, which we've seen happen almost like 15 times over the past 3 months, whenever this kind of sector rotation started to happen, then it's like investors really don't trust the broadening of the rally. And so tomorrow, I think is going to be an important day to see how this plays out as well.
There's been some teases before, but You think this is legit?
Well, I think it's legit, partly because the Fed has changed my mind in terms of where interest rates are going. We still think that the economy is doing well enough with inflation moderating that there's no real good reason for the Fed to lower interest rates. But Jay Powell has made it very clear, the Fed chairman has made it very clear that they really do want to lower interest rates. And so I think now the market is absolutely right in anticipating a 25 basis point cut in September. I don't think it's going to happen in July. And so now we're actually going to see interest rates come down. As you know, at the beginning of the year, the markets were expecting 6 to 7 cuts, and that just never happened. This time around, I think the rate cut is coming.
That feels like that's what the takeaway was over the last couple of days, right? The chair on the Hill, I thought pretty explicitly set the table on what is to come. Nick Timiraos, the Wall Street Journal, writing after that appearance that Powell, quote, made the beginning of a pivot on interest rates that might prove more durable than one that sparked a big market rally at the end of last year. That's what.
And I think I agree with Nick Timiraos. We got Tannor. He's going to be in 2 minutes. He'll come on and he'll talk SoFi. Nick Timiraos from the Wall Street Journal basically said yesterday, after Jay Powell's testimony, it became obvious that he's getting ready to cut. Remember in December of 2023 when the S&P went from it was like 440 to 470. It was like that huge gap up because Jay Powell said they're going to cut 3 times and the market started pricing in 6 cuts. It feels like today and yesterday was that type of a pivot for the market. I know things have sold off, but that's just because, the market was up a lot this year. But it feels like that pivot was real. Now Fed futures are pricing in a 94% chance that we will cut in September. 94. I mean, it's actually 92. No, it's 94. Yeah, 94, 84%, 94% chance. So there's basically a 6% chance we won't do it. And then in December, they're pricing in an 83% chance for December. So the market seems pretty bullish. September, December, we're getting that cut. We probably won't in November because it'll be too political. But if that's the case, then markets should respond accordingly. Now, what happens after the first rate cut? Let's look at some data here. What happens after we get the first rate cut? So here's a chart by Carson Research, and I think this is very important to look at. So not all first rate cuts are the same. On average, when we have the first rate cut of about 0.25 to 0.50%, after the first month, the S&P will return down 2.7%, so 3% down. After the first 3 months, it'll be down about 1%. But after the first 6 months and then 12 months, it will be up on average 4% after 6 months and then 8% after 12 months. So, I mean, if we say the S&P would fall, let's say the S&P is 555 right now. Let's say if we cut in September, that means we would be down 3%. So that would put the S&P at 539. Within the next 12 months, theoretically, we would be at 582 in the next 12 months on that. And now that's just, based on, if you look at this math, if earnings deliver, I mean, whenever we had these types of first cuts back in 2007, 2001, 1989, we didn't have the age of AI. And so if that age of AI hyper grows on earnings, then maybe the S&P has an even better return. But theoretically, after the first rate cut, there's a little bit of pain. and then there's a lot more gains. And as long as the Fed can nail the soft landing, a lot of companies hopefully are going to do well. And it looks like we'll get that rate cut. One of the companies that might do well after we get that rate cut, and we know this because the CEO of that company went on CNBC and he kept telling us that, hey, it's not really his company's fault, it's JPow's fault, and we got to get ready for JPow to cut rates, is SoFi. And we got the best person to analyze SoFi. Tannor, what's up? We can't hear you. You're muted.
I can't believe your stream. You see how fast you fixed my audio? Your stream would have let me stay muted for 12 minutes.
I cannot believe no one said, hey, Amit, fix your mic. I guess they like loved my voice so much. It took 20 minutes, dude. So thank you for coming through. It's
20 minutes. Jeez. I mean,
okay. So
let's talk some SoFi.
Tannor, you're the SoFi guy. I told you this long time ago. And I told you also that I know the stock's in the gutter, but I went through it with Palantir as the stock starts to go up and more positive catalysts happen because we know SoFi is a legit company. It's not GameStop. That your bullishness and your conviction and your valuable DD is going to be rewarded. And as soon as I said, hey, Tannor, join the stream, I think we had like 40 messages saying they wanted your coverage on the stream. So people really care about your thoughts and your analysis on this. Noto's interview yesterday, I thought it went really well. We'll talk about certain parts where he was very explicit. What did you get out of that interview? And did he say something to go against the downgrades that the street is giving, which makes SoFi more obvious of an investment right now?
One, he said Trump 2024, but
well, we'll talk about that.
The main thing that he said that was the most important part for SoFi was that credit performance is very healthy and within their regular expectations. So there was a short report that came out on SoFi the day before. If you just pull those candles back a little bit to show maybe the last 5 days, you're going to see quite a significant drop down to $6.15, the lowest it's been in quite some time.
That was off the downgrade, right?
Yes, exactly. That was the short report, that large red candle right there at the beginning of the day. Absolutely terrible. And to be fair, at the end of the day, they just kind of ended it flat. But people were really worried because they said, hey, net charge-offs on SoFi personal loans are not going to ramp from, they essentially went from 4% 2 quarters ago. Q1 of 2024, they went to 5%. Then this analyst comes out from KBW, Tim Switzer, says, hey, we think it might go up as high as 7% net charge-off rates for personal loans, which would be a pretty stark increase. Now it will increase in my, expectations. They said it's normalizing to regular, pre-COVID levels. That was higher than what we have today. So I do believe that there will be an increase. Just how drastic is it going to be? Anthony Noto is reaffirming that it's pretty well within normal levels. So it's going to be that expectation. You either think that management is lying and they are not doing what they said, or you think that they're going to do what they do every single quarter, which is beat on revenue, beat on net income, and raise guidance for the full year.
So explain to me, like I'm a third grader, this charge-offs thing. The KBW Tim Switzer guy, he's saying SoFi will lose more on their loans than they're expecting, essentially, correct?
Way more, yeah. So let me, I'll take a second here to bring up a chart that they posted. But they're expecting a pretty large ramp up, that people are not going to be paying back their loans and they're going to be defaulting on their current balances essentially with SoFi. And because they're unsecured loans, that means SoFi is just left holding the bag, right? To some degree, that's completely normal. We don't expect everyone to pay back their loans, but with that, SoFi charges a large, 14 to 16% APR, like the interest that they're charging for those loans is to pay off things like the cost of funding and to pay off the people that aren't paying back.
Interesting.
The easiest way to explain it, I guess.
Yeah, no, that makes a lot of sense. So KBW just feels like they're going to lose a lot more than they think they're going to lose. And your argument is, hey, we should trust management because they've never under-delivered in terms of these percentages that they expect, given they understand, the company itself.
Well, the one time that they did under-deliver was whenever the student loan moratorium got extended by the Biden administration. And SoFi came out before earnings and said, guys, look, this is not going to be as intended. We're not going to hit our numbers as well as we think we are. And they gave us that insight. They are not coming out and showing any signs that there's any pain here. They're saying the opposite. They're saying things are good. People need to calm down and that we will recover whenever rates start to get cut. And now you're seeing those expectations because the CPI coming out right now. Look at the fintech sector. I mean, it's running right now. SoFi had a good day, but the lower you go down the spectrum, these like look at Upstart, UPST.
Yeah. Wow. 9%. Holy crap.
Great day, right? Because they are even more held to what's called rate cuts.
So explain to me again, like I'm a third grader. When rates go down, why does SoFi do better?
So there's, although they have personal loans and they're going to be making money off those interest rates, there are other institutions that want access to those rates, but aren't offering personal loans themselves. So probably one of the largest buyers would be insurance companies. Okay. They need, so a lot of these companies will have like whole life insurance, like plans, and they need to hit a certain amount of rate because those plans actually offer dividends. So they need to hit a rate. So what do they go out and do? They invest in REITs and they go out and invest in equities and bonds and other fixed income products. So then they can get a certain amount of yield for their funds that are going into insurance policies.
Right.
So there's a whole secondary market, just like with stocks, for buying and selling fixed income products, which is a personal loan, a home loan, anything that where there's someone that has a certain amount of money and there's some level of interest that can be accrued, and it might be at a fixed return, like a dividend essentially. So that
Right.
would be what you classify as fixed income. So an unsecured personal loan would fall right into that category. And so what happens is that as rates are rising, SoFi, or like back in the day, hopefully everyone remembers the banking crisis, Silicon Valley Bank, right? The reason why they went under is because they took out so many different, mortgage-backed securities and all of these other things that they had at really low coupon rates or interest rates at the time, because that's what the market was offering. But they were very long dated. Okay.
Right.
So they held it for maturity because they thought, all right, we're not going to make as much money as we could signing, new mortgages, but these are the ones that we have and we'll just hold on to them. But then as everyone was taking out their money from the bank, they were required to sell those mortgages. But if you can go out as a bank themselves and issue new mortgages that are going to potentially get you 5, 6, 7, 8%, why would you go and get Silicon Valley's 2 to 3% mortgages? You wouldn't. Right. Okay. So they got priced way lower than their actual value. People would say, hey, we'll pick those up, but we want pennies on the dollar because we are not going to be making back the money that we could if we just signed new mortgages. So the same thing is going to happen here. As rates come down, the personal loans, after rates start to get cut, you're not going to be able to get people to sign up for personal loans at high FICOs of 16%, 15%. It's not going to happen. The market will adjust. Like if you look at the average interest rate here, wait, let me pull up some visuals because this will make it a lot easier.
While you're doing that, I want to play Noto real quick for about a minute talking about the stock specifically, and then I'll ask you.
Sure.
I know that you have earnings coming up in a few weeks, so you're limited in terms of how many specifics you can share. But what's your message to investors? Why should they hold on when the stock is down so dramatically?
Yeah. The thing that we can control is our strategy and our execution. And for the last 7.5 years, our strategy has been consistent and our execution has been consistent. We've driven good, steady growth. When I joined the company, we had less than $300 million of revenue in 2018. Now we're over $2 billion of revenue. We weren't generating profits. We weren't generating positive EBITDA. Now we're generating both positive EBITDA and GAAP profitability. So I'm really pleased with what we're doing. In terms of the stock, I'm equally disappointed. I'm a big investor. Our employees are large investors. What we've seen and what we believe is happening is that the group of fintech companies that have credit exposure has been really hit hard. And they've been hit hard because of the uncertainty around interest rates. When will interest rates peak? And when will credit peak? And as I mentioned, We're really pleased with where credit's performed. We expected it to pick up a little bit, but it's within our tolerance levels. So good sign there. And as I mentioned, 1 to 2 rate cuts would be welcomed and moving in the right direction.
And what about?
So do you agree that was the right way to respond to the stock being down?
I mean, honestly, I think that Anthony Noto has to be extremely conservative. I think that they're in a moment in time right now where they're trying to get out small to mid-sized businesses, and they've asked regulators if they can actually, expand into multiple different product lines. So I think that they're really trying to make happy the Fed, the OCC, the SEC. And so I don't think that he's going to be calling out shorts saying, they need money for their cocaine and all of this stuff that
He should. Why not?
But he's just in a different.
I don't agree with that. I think he needs to have some balls and just like if he said Trump 2024, why can't he say the shorts are on cocaine?
I think that it's pretty easy for him to say that because Joe Biden took away their largest business model, which was
but you don't think Trump would have also like given people a break and not forced them to pay their loans? I don't think it's not like Trump would have been different.
It was Trump that started the moratorium. It was Joe Biden that extended it for way too long.
You don't think Trump would have extended it as well? You think Trump wanted to be the guy to force people to pay their student loans in a pandemic?
He was actively tweeting saying, hey, this needs to come to an end. People have enough money. They're lying about the fact that they can't start to resume payments. So
yeah, but he wasn't the president then, Tanner. That's a little.
No, he was not the president at the time.
Okay, no. so let's talk about the political thing real quick, and then I want to get your thoughts on Robinhood and Tesla and stuff.
Just real quick, I want to go back because I want to make sure I didn't quite answer that question. Here, let me just bring up this part. So this is just showing off credit card interest rates. This is a slide from Lending Club. Now, as you can see, that's starting to top out as this sort of goes very well with what the Fed funds rate is doing. So as we've skyrocketed really high in the Fed's fund rate, fastest increase in interest rates, you're also seeing that in every line of credit. So you saw that with mortgages, with personal loans, with credit cards, everything. Okay. As this starts to turn away and start to go down, so will the new offerings from new financial institutions. Same thing with checking accounts and savings accounts. It'll all start to come down. Okay. The really interesting thing here is that the buyers of loans will want these really high percentages. So for really easy math, let's say the rate on a personal loan right now is 14%, but the new loans that they could start to sign would be about 10%. So they're going to go to SoFi and say, hey, we want those 14% loans that you guys are still sitting on. We'll pay you 12%. Okay, so then we can get that bonus 2%. So SoFi is getting, an increase on their capital from the loans that they're holding from what they could get from signing new loans. So it'll just rapidly increase the total value of their loan book over time as rates start to come down. They'll also be able to. This is not just
for. I mean, every bank benefits from this type of a environment, essentially.
Yes. Well, everyone that has signed loans during a high interest rate environment. The ones that are still sitting on tons of loans back whenever interest rates were at 0% are not going to benefit. Like, yeah. I mean, yeah, they're going to benefit because their loans will get a little bit closer to where they were before, but they're in deep water still.
Right. Okay.
So SoFi has been signing up loans very rapidly during these high interest rate environments. That's why they are going to benefit, at a significant pace. Same thing with Lending Club. Same thing with Upstart. As rates start to come down, there's going to be a ton of new originations.
So let me ask you this question. So TJ, friend of the channel, and by the way, guys, I'm putting Tanner's Twitter in the chat, so please make sure to follow him on Twitter. TJ had a good take yesterday that I really agreed with. He has like 200,000 shares of SoFi. He said, why does SoFi want a SaaS multiple if the CEO is never talking about them as if they're a SaaS company? He keeps talking about loans and all this lending stuff. And like, that's a bank. That's not a SaaS company, even though they're growing 21% in their SaaS business. Do you think Noto needs to start talking more and educating people about Galileo to command a multiple from the street that is more SaaS-like?
Yes. Yes. I mean, if you want Galileo to be a third of your business, you should talk about it as if it's a third of your business, if not more. I mean, look at the way that Amazon talks about AWS, and then look at the way that SoFi talks about Galileo. They don't talk about it. And it's like, okay, you want it to be the AWS of fintech.
So why the hell are they not talking about it like that?
That's beyond me. I mean, aside from privacy for their clients, I'm not sure why they don't talk about a little bit more in depth about how the actual signing process is going. And it could just be a similar thing with Palantir. I mean, Palantir was very quiet for a long time until they switched their strategy.
But
And
do
now
you,
they
do you
talk
think
about
there's
it a lot.
yeah, but do you think there's an argument that they don't have anything to talk about? Could that be?
No.
Okay, so if they have something to talk about, then do they just need to hire a public speaking coach to get him to talk more effectively? Like, I don't understand how they're not discussing they're building a Stripe competitor inside of their enterprise.
Yeah, it's crazy the market share that Galileo has. You're talking about 151 million accounts. They're absolutely massive. Okay. The only slowdown that has happened recently is because there's no VC funding for new fintechs. It's absolutely dried up. Okay. So they've had to pivot their business model to go after large financial institutions, and they'll get those too. But they have a very long turnaround time. I'm talking 18, 24 months. So
okay. That to me is a little bit of the bear case for Galileo. If the argument is you need new fintechs getting funded by the VCs to be able to be a client of Galileo, and if there's not enough funding for fintechs in the next 2 or 3 years, do you think that is also why they're kind of downplaying it for now?
Well, I mean, yeah, that's why growth went from 25% all the way down to 13%, but that will accelerate. And the one thing that I really like about Galileo is they're talking about putting guidance on Galileo. They're saying, hey, we think we'll hit 20% this quarter, or sorry, 20% this year, 25% next year. It's like those contracts are already signed. Like those are in implementation phases. So the chance that they miss those guidances, I think, are few and far between, because it's already in the pipeline. It's so far in the pipeline that I'm going to have to believe in their expectations for growth for Galileo.
Yeah.
It's the same thing with like a lot of these businesses. They already know what their 2025 looks like. It's just a matter of getting those clients in.
This is exciting. I want to see how this SoFi story plays out, because it does feel like a lot of Hims, Robinhood, Palantir, when they were stuck in the single digit range, but a catalyst happened, whether it's profitability or this or that, and just like everything changed. And I'm wondering what that catalyst is going to be for SoFi. It can't just be rate cuts. It has to be more than that. But eventually it's either going to happen or not, right?
Yeah, I mean, like some people I can see in the chat saying, it's just a bank, it's boring. Yeah, but my bank is growing faster than your Palantir. So like, why don't we focus on the growth rates rather than like freaking?
Well, that's one thing I disagree with you and DDI on. Just because it's growing faster, I don't think it means it commands a multiple to reflect the growth. If it is, at the end of the day, a bank that trades on book value, like that's just like fundamentally, you could be growing 1 trillion% a year. If you trade on book value, like you trade on book value, you know what I mean?
Well, it's getting traded on book value before, but valuation. I mean, you're a Palantir shareholder. You're aware that companies can get repriced. They like the way.
No, they can, but the CEO has to bang on the table and call everybody cokeheads for short. Like this, there has to be something external that makes you excited to re-rate the company, and I don't think so far Noto's given that excitement yet.
So this is what I'll say, and then we can move on from SoFi. I think that that Anthony Noto is being very strategic. From what I've heard, from what's going on in the company, is that they actually are very prepared to release many products, and they've held on to it right now because there is no like. This is my opinion. I didn't hear this from anyone, but I do believe that they. Well, okay. Let me clarify. I did hear that they're releasing products. What I didn't hear from them is why they're holding on to them. My expectation is that they know if they release SMB banking or any of these other products into this environment where the stock is already shit, it's going to mean nothing for their valuation. So during a time of interest rate cuts, better loan portfolios, everything like this, they are going to do exactly what Robinhood is doing, of taking advantage of the momentum and getting a true repricing in the stock. So what did Robinhood do? Crypto started to return. They got one great quarter, and now you're seeing them bang out a ton of new acquisitions. They're moving very fast, and I think SoFi is going to do the same thing. But they are in a moment right now of building. It like everyone's saying he's talking shit about the fact that this is a transitional period. I really think it is. Like, and I'll be left holding the bags and holding the hits on my reputation if it doesn't come true. But I'm not going to bet against a company that has done more than what they've said every single day, or well, every single quarter, I should say. You know,
So you're
that's
saying
a very hard company to bet against, especially whenever they say they're going to 10x EPS from 2024 to 2026. I'd like to see Palantir do that.
So you're basically saying in 2025 or 2026, when rates come down, they are going to have a Robinhood-like moment where they announce product after product after product. And because there's going to be a friendlier interest rate environment, the market will actually accept those products as like real things to value them against, besides being a bank. And therefore the multiple will increase. And the reason they're not doing that right now, your argument is because of interest rates, essentially?
Well, because they'll just be putting a press release into nothing. That the stock is already being absolutely destroyed. Them coming out and saying, hey guys, by the way, we are doubling our efforts in credit cards, which is already being seen.
But Robinhood was being destroyed, and then they did the same thing. They came out with innovation. Don't you think that would help the stock not be destroyed?
I think that Robinhood started to really double down on their innovation during a crypto move starting in January. And that they were already seeing the multiple expand because their total addressable market or the clients that they could go after was starting to expand. And then boom, what did we see? UK, wallets in Europe, all these different ways to acquire customers through 1% match, 3% IRA, credit card got released, all of these things in a matter of months, right? Acquiring Bitstamp, acquiring, what was the one that they just acquired? Just a
Pluto.
Pluto. It's all been very, very fast. The 2 years prior to that, I mean, it's been relatively quiet.
Yeah.
So this is SoFi's moment right now of saying, hey, we're not going to have loan growth. We're worried about where interest rates are going to go. If it gets cut in September, something along these lines, I think that they're going to move fast again. It's very hard to call SoFi a product-facing company, but we have to look back at that. Like, this is the exact same management that was in place during 2019, 2020, and they were the fastest movers out there. So to think that they don't have it in them, that this is somehow a different company than what it was during COVID and how fast they moved then, I'm going to call BS.
All right. Let's talk about another stock you're in, Robinhood. Bank of America said yesterday they're going to crush EPS in Q2. Wolf Research says $29 price target. What are your expectations in a month when they report earnings?
I mean, I haven't looked at the actual like what I think revenue and net income is going to do, but from what I can see so far with website traffic and Vlad putting out their updates on assets under custody for retirement accounts and rolling out credit cards, I think that the street's absolutely going to love it. I think they're going to do fine. I'm still holding. I haven't sold a share. I think that this is a $30 stock in the next couple months.
How heavy did you go? Is it like
not big?
So it's not like 1% of your portfolio or anything like that.
I mean, it might be around there. Yeah.
Okay. Tesla. You're a big Tesla guy.
Yeah.
This Bloomberg article, it's bullshit, or is this first, before we get into that, is this rally real or meme rally to you in Tesla?
Bro, I was literally talking about like right as this rally started. I mean, everything I talk about stocks is all live, so someone can go find it. But I was literally talking about like selling like 40% of my Nvidia shares and going into Tesla.
That's what Kevin did. Kevin did that.
It happened so fast, man. I can't believe it. And now this news about the extension on Robotaxi is devastating. Not happy.
Do you think it's real or do you think it's fake?
I think it's real. Yeah.
Why do you think it's real?
Because it makes sense. I think that it's a very hard thing to come out and do. And like, I don't know what they're going to do, if they're going to do some sort of Rimic-esque thing showing, some of their drawings and real, here's our prototype car. And I don't know. I don't know what's going to happen. I know that we're not getting a Robotaxi this year. Some people got super bullish on the idea that they're going to show a product and release it. Not going to happen. But I don't know, man. I don't know. I'm still very bullish on the company. I think that they can be a much higher valuation going forward. That's why I'm investing in the company, obviously. But it does suck. It does suck. I don't want. I think that Robotaxi is a big part of the reason why I'm investing, but not because of like what ARK says or any of this shit. Like, that's way too bullish.
So were you buying at 138 when it got low, or no?
No. I think the lowest I bought in this last rally was like 160 something.
Okay, so
or maybe not even that, like 170 something.
But you technically you were buying the dip, and so you were bullish at that time.
Yeah, absolutely. I think I was buying when like I was on your show with Vlad or not Vlad,
All three
Vitaly and
of us.
stuff.
That would be fun. All three of us.
Yeah.
Um,
I exchanged a couple DMs with him, so
he knows, dude. He's tapped in.
he's tapped in for sure.
He
Yeah.
knows. He was probably doing this with his hands when you said about Robinhood. He's like, we got this.
Yeah,
motherfucker. Finally
converted the SoFi freak.
we finally got him. Okay, so speaking of ARK, you and I had a little debate last time you were on a couple months ago, and you said ARK doesn't have a research problem; they have an allocation problem.
Mm-hmm.
And I said no, they have both. Like their research is trash and their allocation is worse. She put out a summary yesterday on her website, basically saying, okay, essentially she said, hey, I know we fucked up on some of these stocks, but like disruptive innovation will win at the end. That's the thesis. So like Path will do better than Nvidia, essentially is the metaphorical argument she was making.
Yeah.
Do you agree that her picks are her research will play out, or do you think the Mag 7 will lead the way over the next decade?
Bro, that's a super hard question.
I think it's a very easy question. Do you do Path or Amazon? Which one are you taking?
Amazon. Amazon. I don't think that's well, I haven't read that letter. I don't think she's saying Path or Amazon in that thing. I think she's saying disruptive innovation is going to win. And
but she doesn't have the Max 7 as part of disruptive. That's her point, right? Her point is large cap is frothy. We invested in deep value names like Path and CRISPR and all that stuff.
Yeah, I don't even know if that's true. I think one of the easiest bets to have made looking back at the internet era was broad market, right? There are going to be a bunch of internet companies that benefit from the internet, but Walmart benefits from the internet. Like they're the most basic companies in the world benefit from those innovations. And I think that the same thing is going to happen with AI. There are some, very particular stock picks that you can make in AI that will benefit from this rally. But I also think probably the easiest bet to make is just betting on the American economy. I think that is such so UiPath beating out Amazon. I mean, I don't know, man. Amazon's going to be such a benefactor, even on the logistics side and all of this stuff. It's just, I wouldn't bet against it, especially.
But again, that goes to the argument that her research says that Path metaphorically would do better than the Max 7, and that's the part where I'm just confused so much.
Yeah, Zoom's not it. I don't know.
Yeah. But granted, Tesla and Coinbase are a majority of the fund. That might end up saving the fund over the next couple of years. So
yeah, man,
still might outperform.
All right, I can say, fintech has been taking an absolute shellacking. It's been horrible to try to go through, especially the ones that are deeper on the lending side. But as interest rates come down, they will be some of the largest benefactors of the markets. And I think my portfolio is better positioned now than it's ever been.
Yeah, I mean, I think interest rates coming down is important. CPI news that we got was important. Do you also think small caps take off at the end of the year, or you think Nvidia just keeps gaining momentum?
I mean, it's a hard call. I would like to think so, just because they have not been getting the love and they have been growing. Like, even SoFi doesn't necessarily fall into small cap, and I don't follow a lot of actual small caps. But yeah, I would think disproportionately they're getting a shellacking, and that always seems to balance out. So I'd have to say that that's a true statement.
All right. Tannor, thank you for coming on. Tannor does a fintech daily. It's not even a weekly, a fintech daily, fintech frenzy. That's what it is. Every single day at like 8:30 p.m. So please make sure to check out his YouTube channel. And yeah, when are you buying Palantir?
I don't think I like that stock at all.
I don't understand how you'd like this is the coolest fucking company on the planet.
It is. It absolutely is. I look at that valuation and I'd rather buy more Nvidia today than that stock.
Wow, that's a direct shot at their growth. You just don't think they're going to grow into it.
I mean, Wall Street doesn't think that I was just looking at the earnings revisions recently. People think it's going to grow at like 20% all the way through the next 5 years. Yeah,
we can't have that. It needs to grow faster than that, but that's the mystery, right? We'll see.
Then so I would love to hold Palantir. I think that the whole management is sick. I love the idea of the company, but I gotta buy growth. I mean, but you and your buddy Tevis, when it was 15, 14, the whole argument, I remember I was on your show, it was valuation. So if valuation always is the concern every time it gaps up,
You might
when
never
it was
get in.
15, 14, I was a shareholder. I
Oh, you
I was
sold. You're
I
out.
sold. Yeah, I sold at around 1680. I think was my exit.
Oh,
Because
okay.
that's when other stocks looked like they were valued better. Now, in hindsight, that was a bad time to sell. I could have gotten a lot more out of it, but it's in overblown territory, and I don't like holding into those. Like, it's hard for me. It's hard to hold a position the way you're holding it because, and to you, man, you've earned so much doing it. But I wouldn't buy at these levels. I mean, come on, man. Like,
But you did hold Nvidia for a long time, which was overvalued for a long time, right? I mean, you did go through that process.
and that is just I think goes down to your DD, right? Like if you
Right.
fully know a company, it's much easier to hold than it is to hold a speculative position. I've been in Nvidia for many years, so
Right.
it's much easier for me to hold. Same with Tesla. Like Tesla has gone through periods of great overvaluation, but yeah.
All right. Thank you, Tanner. Appreciate it. We will see you on the next one. Thanks for doing this.
Thanks, brother. Bye.
See ya. Bye. All right. Cool. So if you're just joining, the headline news of the day, I'm trying to get some more coverage on this. I'm trying to see if Elon's tweeting about it, but he's not, is that Tesla's Robotaxi is, as per Bloomberg, officially delayed till October, their 8/8 event. Yeah, Elon hasn't tweeted. And I guess we're going to have to wait and see, dude, until this becomes real. But as of now, the stock market definitely does not like what is happening. Tesla right here, 239 after hours right now. Palantir as well, 2763. So holding on to that 2750 range. But Tesla still getting a beating. Did anyone sell their Tesla today? Did anyone sell their Tesla? Let me know in the chat. Did anyone buy the dip on Tesla? Riley says there is no Robotaxi. Dude, the biggest rug pull of the year would be if they just delay this thing for like another 6 months. I mean, I don't know, dude. I don't know what Wall Street's going to do to the stock if they delay it. I hope to God that doesn't happen. But remember, Wall Street was pricing in first half, not second half of 2025 for the launch of the Robotaxi, which is what Elon said they would do in the Q1 earnings. And that's another reason it gapped up from 145 to 167 that day on earnings, because like that was the biggest news out of Q1, that Robotaxi is really coming. And then put 8/8 together with that, it seems like it's going to become real. But now they actually have to do the event and make it become real. Brian closed some covered calls. Anjan said, I sold. All right, so we got some people taking profits. Tristan said, I took out a loan to purchase more shares. Oh, boy. Okay, so he went on margin for this one. Interesting. Let's see, man. Let's see. It is going to be interesting now if we dip into the twos. If we dip all the way back to 200, I mean, goodness gracious. I don't think that would happen. If that did happen, that would be like, that means I would have been wrong then. I would have been wrong that this was an institutional rally, because maybe I'm still right, but I can't imagine institutions sell off the stock that aggressively over a delay of the Robotaxi announcement. Like there's just no way institutions sell it off because of a 3-month delay. So it would have had to have been a retail rally, but there's no way it's a retail rally because that's too much money moving in too quick of time. So that's why I don't think we go to 200, but maybe we do dip a little bit more. What did Uber do on the news? Uber went up. I thought this Uber Tesla thing was just like a conspiracy, but it seems like it's real. Tesla goes down, Uber goes up, Tesla goes up, Uber goes down. I mean, 6% on Uber. Like, why? Uber got no upgrade. There was no news. Nothing happened today. It's just like money rotated from Tesla to Uber. I guess the street was like, well, if Robotaxi is not coming anytime soon, then people are going to keep, getting into Ubers. So let's buy Uber, which is crazy. I think that logic just does not make sense even in the short term, but I guess that's how the market kind of trades on it. President Joe Biden will be giving a conference today at 6:30 p.m. That's going to be a very important conference. And that conference, it's a press conference. And I don't even know why he's doing the press conference, but let me see if I can get the title for it. He's going to be doing some press conference about something. Biden holds a news conference amid growing calls to abandon his re-election campaign. Okay, so the conference is actually going to be, this is going to be in 2 hours, him basically reaffirming his bid for presidency. So it'll be interesting to see how the futures market reacts to what he talks about then. It'll also be interesting to see how he performs on this conference. He just met with a bunch of NATO leaders over the past couple of days. So that'll be happening at 6:30, and we'll see what happens there. I doubt he's resigning. I don't think he's resigning today. I don't think he's making that. That would be a very shocking announcement if he straight up resigns, but I don't think that's going to happen. Volkswagen signed a deal with QuantumScape solid-state batteries. The stock moves 30%. Yeah, so the reason Quantum was up today is because VW, that also signed a deal with Rivian, signed a deal with them to make the batteries for those Rivians, I imagine. So, and for the Volkswagen cars themselves. So $7, 30% up. Market cap is $3.5 billion. So this one was up 20% yesterday, up 30% today. Basically, it's up 50% in 2 days. It was at 457 on June 27th. So Volkswagen really exploded this stock, and they exploded Rivian in the course of 2 weeks. Rivian right here, 1676. At one point, it was at 1723. So that was really good for Rivian as well. Okay, a couple other headlines that I wanted to share. Oh, money market funds. What do you guys think? Well, we went up or down. What do you think? So last week, put in the chat, last week we went up by 50 billion in money market funds. Do you think we increased or decreased this week? Increase or decrease this week? Krupa says, I sold 25% of my Tesla at 267. Historically, they go down after a rally, and I had instincts. I think this makes sense, but only if you're like, I don't think this makes sense if you have an average of like 95. Like, that doesn't make sense. But if you got in at like 230, 240 or whatever, then sure, whatever, because you can get back in at 230 or 240. But if you have such a like really low average, then obviously I think like you're not going to get a chance to buy back at 95 again. I don't think you would. But if you just got in the past weeks, then yeah, I mean, there is a way to time the top and the bottom if you think that it's too much too quick. Why do you keep saying Volkswagen? Because everyone knows I don't know how to say that word. There are certain words like Massachusetts I just can't say. And so if you're new to the stream, I don't know what it is with my lips. I can't say Volkswagen. Like I suck it. I can't say physician. I can't say Massachusetts. It's just, it is what it is. Why did you break up with Jesse? I did not break up with Jesse. Jesse doesn't do YouTube as much anymore, but he's still active on Twitter. I think Jesse did have some personal stuff that happened a couple of months ago with his nephews. And so that's why he took a little bit of a break from content. But he's still on Twitter. And by the way, he's up a shit ton of money on those Tesla calls. I commented under his post yesterday. He's up like $1 million, dude, on the Tesla 330s. And we got to give Jesse his credit, dude. Like, I mean, he was the only one that I know that was really pounding the table on those June 330s when Tesla was at like 140. So he's done very well on those. Yeah, yesterday he was up 750 grand. It's not bad, dude. Not bad at all. So shout out to Jesse on that one. Indoor Noob, thank you for the $5 super chat. Appreciate that. All right, so here's the money market funds. They went down by 10 billion. Not really that big of a deal. It did go down. I thought it would be down a little bit more, but at least it didn't go up. We did see money leave the money markets, and now we're going to have to see in the next couple of weeks if those money markets continue to go down. But decrease from 6.15 trillion to 6.14 trillion, down 10 billion on the past week. So again, kind of a nothing burger, but at least it didn't really go that higher. A couple other things. So I want to show this. OpenAI. Let's take a look at this. OpenAI's revenue breakdown. One of the research firms broke down. This is what they're estimating they think it is. So 3.4 billion in ARR. And again, this is giving a limelight on how big the opportunities could be for AI SaaS companies. They're estimating OpenAI gets 1.9 billion off ChatGPT Plus from 7.7 million people paying $20 a month. I'm one of those people. And then 21% or 714 million comes from ChatGPT for the enterprise, which is 1.2 million seats at $50 a month. That's kind of the market that Palantir is going to be playing in. Palantir is going to be expecting to do 640 million, by the way, just from the United States enterprise market this year. So ChatGPT is doing 715 million globally. Palantir thinks they can do 645 by this year, just in the United States. And then 15% from the API, so 510 million. And then 8% or 290 million from the ChatGPT team for about 980,000 seats at $25 a month. I thought that was interesting. I thought that was very interesting. Because it goes to show how big they can get. Their valuation is close to 100 billion. So they're trading at 33 times revenue, which they're growing at like 200%. So I guess you could justify that growth, or that valuation. But still, I mean, they're definitely showing that the market is big for AI. And now the question is just going to be, how big can that market continue to go? Another chart that's very important. AI Money, thank you for the $5 super chat. Appreciate that. Thank you guys for the super chat. So this right here is really important as well. There's only been one other trading day since 1979 when the small cap Russell 2000 IWM rose 3% while the S&P was down on the day. And that was October 10th, 2008. Russell was up 4%, S&P was down 1%. Today, Russell was up 3%, S&P was down 1%. Now, I know as I say 2008, that feels a little scary because it's kind of this whole, well, if that happened in 2008, is that kind of could things replicate themselves in terms of what could happen? I don't think so, but someone that we all know kind of thinks there is a chance, and that is Mr. Meet Kevin. So what are Meet Kevin's thoughts about what's going on right now? He says the markets must rebound or stabilize after today's decline, because if not, we get into a recession. So he says, if today is the start of a longer-term downtrend, here's what happens next. Earnings come into focus on the downtrend. Bad news and even good news will be taken as bad news. When company stocks falls, companies lay off to minimize spending and maximize EPS. Unemployment spikes and typically very sudden. That's when the SAM rule measures happens, the velocity of loss. A market correction could add fuel to the fire to unemployment. It happens fast. GDP plummets. Then you confirm a recession. He says some people are suggesting this is just a rotation from mega caps to small caps. Yes, small caps are cheap, but if the megas sell off and the broader market sells down, everyone gets burned. And he's right about that. If Nvidia falls 30%, small caps are not going to save you. Like the whole market's going to take a nasty beating, even if small caps go up 5% or something. So I think he's correct about that, but I think he is wrong in the concept, and he's not proclaiming that, but he's just warning that we would have a broad sell-off in the mega caps. I don't think that's going to happen. And the reason I don't think that's going to happen is because we even saw a recovery intraday on some of the mega caps, like Amazon, Nvidia, even Palantir. I know Palantir is not a mega cap, but still in that tech play, they were down much more than they closed at. And that's because, again, people stepped in to buy the dip. So if we get a consecutive string of days, if not weeks, of seeing Amazon go from 127 now down to, it's not Amazon, Nvidia 127 down to like 100, maybe he has a point that things are getting a little dicey. But if Amazon goes back to 105, I think so many people are buying that dip. If Amazon goes to 112, I think so many people are buying that dip. I keep saying Amazon, sorry. If Amazon were to, if Amazon went to 112, I think a lot of people buy that dip. If Amazon goes back to 160, which would be about 10% down from here, I think a lot of people buy that dip. So I think large caps still are a flight to safety. They have real revenues. There's cash flows. They're buying back the crap out of their stock. There's dividends. There's growth. AI is the tailwind. They're the only ones that can spend on CapEx when it comes to building out the AI infrastructure. So I don't think today's sell-off is a trend in the large caps. A rotation, sure, not a trend to the downside. And hopefully that allows the market to continue doing what it does. Thomas says, and it was hardly a real dip, more of a broadening out. Yeah, I agree. It was really hard. I mean, the S&P went from 561 to 556, and it just gave back the gains it got yesterday. So really, we didn't see too much of downside. Also, Meet Kevin. I love him, but he likes to do the market crash thesis a lot. I mean, in March, he was calling on the market to crash. He sold Tesla, all this stuff. And then we realized inflation in April was actually coming down. And in March, to his credit, inflation data was really bad. So I could see the crash thesis, but we knew it was coming down. And then April came down, and then, he pivoted. So the point is inflation is coming down. And as long as inflation continues to come down, we should get a rate cut and things should be in the right trajectory. What else is here? You guys know the Las Vegas Sphere? They announced today that the Sphere is powered by $1 million worth of NVIDIA GPUs. Or sorry, NVIDIA revealed that today, not the Las Vegas Sphere. But that's pretty incredible, right? For those that have been to Vegas, let me know in the chat if you've been to the Sphere. I've never been to the Sphere. I've seen it when I was in Vegas a year ago, but I didn't go inside it. That's kind of crazy, right? $1 million worth of NVIDIA GPUs are actually powering that Sphere. So it just goes to show how ingrained the GPU technology is into all the different things that are starting to pop up. And it seems like it's going to be exciting to see where that goes. Couple notes from Morgan Stanley on Tesla. So they said today, there was one thing about yesterday's lunch. This is Adam Jonas that I didn't actually realize until a client brought it to my attention later that afternoon. The core auto business barely came up at all. For 90 minutes, we talked about energy, humanoids, AI, FSD, China, and Robotaxi, and other topics. The topic of cars was almost completely absent from the discussion. So this is Adam Jonas, one of the biggest bulls on Tesla. He said, look, there's a lot more to the Tesla story based on the conversations that I'm having with clients. What was really interesting about this, look at this in his note. He said, the topic of cars was almost completely absent, and Robotaxi Day, parentheses, invitation still not received. So it's kind of interesting. Even Adam Jonas was like, hey, in his research note to his thousands of Morgan Stanley clients, hey, who's been covering Tesla for like 10 years now, I have not got my invitation today. And then Bloomberg, an hour later after that research note comes out, says, well, this thing's not happening till October. And you kind of put two and two together. If Adam Jonas didn't get his invitation, it's a month away, 2 months away. You would think the invitations would come out. The influencers would get their invitations, all that stuff. Maybe the Bloomberg article is real if people aren't getting invited to this event because it's not actually happening in August. So we're going to see. We're going to see how that plays out. Just came back from the Sphere. It's amazing. Great show. And there's a robot there that you can ask questions. Wow. You can ask a question to a robot at the Sphere. That's so cool. Tristan says, can you recap CPI? Yeah. The basic recap is that, shelter went up a little bit, but gasoline went down enough to offset shelter. And then 3.0 was the inflation rate versus 3.1, which was really good. It was below expectations. And the market decided that it seems like rate cuts are going to happen. Again, the Fed or the future is priced in a 94% chance we're going to get a cut in September. At this point, it feels like that's going to happen. And that should lead to a rally in a lot of these smaller names and a broadening out to the S&P 500. So I guess the only thing that breaks that thesis is worse inflation data, surprising to the upside, which is possible, but I don't think that's likely. Or earnings disappoint so aggressively that the market is just like, we can't justify any of these multiples. And I think both of those might not happen, which would be a good thing. Here's one bear case from Wells Fargo. Not really a bear case, but an argument for why valuations in the Mag 7 might be a little overstretched, and their argument for why it's time to transition to small caps.
Scott Wren of Wells Fargo Investment Institute. Scott, we're going to start right there because we had the softer than expected CPI reports. Claims basically looks pretty good today, too. We're teeing up for earnings from the banks tomorrow. But really, it was everything that's been underperforming up until now that surged higher, including that Russell 2000 today.
Yeah, Morgan, I think, you had certainly a lot of people short the Russell 2000, but you've had all these stocks that have done really well, communication services, technology, leading the charge for at least the last 18 months in a big time way. And so I think when you hear news, the market expects inflation to come down. We do too. But when you see the news, it's a little bit better than expected. And, that kind of sparks the possibility that we might have a broader participation here if the economy improves, and it'll be more than a two-sector 5 or 6 stock story. So, that's a big move on the Russell 2000 on one day. I don't think one day really creates a trend because I think we're going to be in a slow environment economically here for probably the next 2, 3, maybe even 4 quarters. So I think it's too early for the Russell 2000, but you can see that the market's ready for some early cycle stuff. But that's, I don't think that's going to happen for a little while.
Let's transition to fast money real quick. They're just starting right now. I want to get their take as well based on this new CPI data that we got.
Consumer price index fell 0.1% from May to June, the first month-over-month decline since April 2020. Markets now seeing a 90+% chance of a rate cut by September, sharply higher than just a day ago. The move lower in yields, understandably boosting rate-sensitive sectors like housing, banks, retail, biotech, small caps. The homebuilder ETF jumping more than 6%, its best day since November 2022. The Russell 2000 hitting its highest level since March. All that made sense. On the other hand, the recently red-hot mega-cap tech stocks did not catch a bid from the drop in rates. AI darling NVIDIA dropping 5.5%. Apple snapping a 7-day streak of record closes. So is this kind of green light for investors to exit what have been very crowded, profitable trades and rotate into some of the laggards in the market, Guy?
Well, when you see price action like this, the answer is yes. And again, we had brought up March 8th a bunch of times in terms of NVIDIA specifically. You subsequently brought up Broadcom. I mean, that March 8th reversal in NVIDIA actually worked. And by middle of April, the stock was down 24%. Individual stock-wise, you saw the same thing on June 20th in that name. And by the way, it's never recovered. But when you see a move like this, the magnitude of the reversal in the S&P, which, by the way, today made an all-time high and effectively closed on the low, that's got to give you some pause, I think, for the overall broader market. So I do think those big names are vulnerable for the first time in a while. And for the first time in a while, you're starting to see technicals that suggest that the broader market might be in for a bit of a sell-off.
I know what you did last summer. Remember that one?
No.
Yeah.
Is that a movie?
Yeah. So last summer, heading into Q2 earnings season, we saw similar sort of sentiment, really positive in a lot of these big names. Now, granted, they're all up a lot more year over year since then. And to Guy's point, the NASDAQ and the S&P were making new highs today before these huge reversals. And so when you think about just how investors are positioned, it's not too different as we go into Q2 earnings season. It might be just as good as it gets right now, especially if you see any sort of deceleration for Q3 or the back half of this year as it relates to guidance. And so it probably makes some sense to kind of take some profits here, roll into some of these other things. And I'll just say this, it's really interesting that the S&P closed down less than 1%. We saw how the equal weight S&P traded, and I think we're just got to mention the Russell 2000 if you look at the performance there. So a clear rotation. But at some point, if you start getting softer economic data, okay, and we start seeing some guidance from some of these consumer-led companies, I think the correlations are going to go much higher. And the last thing I'll just say is the fact that the VIX was unchanged today tells you that there's not a lot of fear as it relates to the broad market.
Right. Grasso, this is sort of what you want to happen ahead of earnings season, right? I mean, you want sort of a little bit of air to come out of the tire, so to speak, of the hotter trades before we get, results from NVIDIA and Microsoft.
Yeah, you always want a better entry point. I think, if you go back, the IWM's outperformance today over the NASDAQ or the S&P, it's the biggest outperformance dating back to November or so 2020. So this is not an insignificant event. Does this last longer than a day or two? So the market wants to believe that we could usher into those smaller cap names. The problem is the smaller cap names need a lower rate environment. This is the first time that the market seems to believe that the Fed is going to cut rates really in the near term versus something where they say, okay, we're leaning more dovish at this point. So September, I still think that they're behind the curve. They should have been cutting before, but I think September, as you mentioned, 90% odds, and I think they probably cut again a couple of more times this year. Having said that, let's see if this lasts longer than 2 or 3 days, because I have a feeling money will rush right back into those mega cap names again.
I guess
yeah, and I think that's the thing for me, guys. The biggest thing I'm thinking about as we end out the show here is that although we saw the rotation from large cap into small cap today, which wasn't really a rotation, but it was a little bit. If this does not last, because at the end of the day, the market still wants exposure to the best 7 companies in the world, then my biggest question here is if NVIDIA goes up tomorrow, does IWM have to go down and act as the converse of that, which has happened every single time? Or can IWM maintain 211, maybe get to 215, even if NVIDIA goes up? Because it kind of feels like the money has to come from somewhere. Either it's coming from money market funds, and everyone gets money, IWM and NVIDIA, or it's ripped from one or the other. And today we could see it was obviously ripped from one and went to the other. But if both get them, that's exciting. If one gets them, that's fine. I would like IWM to get more momentum. Again, like I said in the morning, I'd rather have IWM at 250 and NVIDIA at 100 versus NVIDIA at 180 and IWM at 195. It just feels like it would be more healthy. But that might not be how it plays out because more people probably care about NVIDIA than they care about small caps. So we'll see. Can mega and small caps coexist? Yes, they should be able to. I mean, that's kind of Tom Lee's thesis. They can, but the money has to come from somewhere. That's the thing. And it's like, this is why Stan Druckenmiller, the perfect example is Stan Druckenmiller. He sold all his NVIDIA at $997. And the reason he sold it is because he felt that his words were the market has figured out what I figured out when it was at $100. So he made his money and he took a bigger bet. And so the question is going to be, can he be right while everyone who's pumping NVIDIA on the street also be right at the same time? Remember, he bought 307,000 shares of KRE as well, which is great because I think he bought regionals when they were at like $37. Now regionals are at 51. And again, regionals do well because the loans come off their balance sheet and that helps them a lot more. And then IWM, he bought $664 million worth of calls. He also followed Nancy into Palo Alto Networks. But it's a question now of what happens. Is it going to be a rotation? Is it going to be both? Or do large caps continue to just gain more momentum? All right, cool. That's it for me. You should have got TNA when you had the chance. Yeah, TNA, I didn't end up getting those options on it, but I got too greedy. I wanted it to fill at a cheaper price. TNA, great day, up 11%. But none of this lasts if small caps don't, like, this is one good day. The question is, can small caps continue their momentum? And if not, then we might see the rotation right back into large caps. All right, that's it for me. Thank you, everybody. This was fun. I'll be back tomorrow on the market open. We'll have Biden speaking at 6:30. So that'll be interesting. We'll see what Biden has to say, what he announces, if he doubles down. Last time he spoke in one of these mini press conferences off the Supreme Court ruling, he spoke for 300 seconds and then he was gone. This seems like an actual press conference, so he's going to take questions. And so 6:30, we'll see what Biden has to say and how that affects the broader markets. All right. That's it for me. Thank you, everybody. Appreciate it. I'll see you guys tomorrow on the market open. Bye, everyone. Have a good one.